I want to see a very clear understanding of like, and this sounds a bit brutal, but where's the headcount going to drop? Because fundamentally, the only reason this is interesting is because it's not slight transformation of EBITDA, it's like radical transformation of EBITDA. And radical transformation of EBITDA can only be achieved if a tremendous amount of the work can be automated through, as I mentioned, we're involved in a building management roll-up, AI roll-up. And for me, that's like just night and day obvious that it's a huge proportion of its overheads can be automated and therefore obviously reduced.
Welcome to the RolyPoly, the podcast about all things roll-up. Today, I'm speaking with Sam Hields, partner at OpenOcean, an early-stage VC out of Helsinki and London, founded by the creators of MySQL. If you're building an AI-native roll-up or even thinking about raising for one, stick around till the end. This one's for you. Sam was a software engineer at JP Morgan, ran ops at Uber, and sat at the exec team at Community Fibre through a £400 million LBO. Now, he's one of the voices in Europe betting the next wave of winners won't be pure software. There'll be AI-native roll-ups eating the service industries. We get into why services is 10 times the size of software and why Sam thinks we only get one shot to consolidate it, a bit like Thatcher's privatizations. The first question he asks any founder pitching a roll-up, where's their headcount going to drop? And why scaffolding is likely a terrible AI roll-up, but building management is a great one. Let's get into it. Hello, Sam. Welcome to the RolyPoly. How are you doing today?
I'm good, and thanks for having me, Dylan.
So you've worked at JP Morgan as an engineer, Uber as ops, scaled Community Fibre through a £400 million LBO. Most people with that background go and found their own thing. Why did you choose VC?
Yeah, well, it's a good question. It's actually a question I get all the time. I don't know if I have a necessarily good answer for it, other than, I think starting your own company requires a couple things. And I think probably the main thing is you really have to want to do something, kind of a singular thing, really, for a very, very long period of time. I don't think at the time when I was in my late 20s, when I moved into venture capital, that I necessarily had that. So, I've also, if you look at my background, there's not really a common thread there. JP Morgan obviously is a bank. Uber was, logistics, and Community Fibre was, fiber optic builder stroke ISP. So it's not like I was like an obvious candidate to go build something in a certain area, like I spent my life in medicine or something. So I think that was probably why. I mean, the other thing, and I think this is why a lot of people become venture capitalists if they can get into the industry, is if you are someone who is just intellectually curious, it's a very, very good job for you, because every so many months, at least, really, these days, there's a reinvention and you have to kind of learn something. So, yeah, I think it lends itself very well to that, and I tend to put myself in that bucket.
Yeah, and can you tell us a bit about OpenOcean?
Yeah, sure. So OpenOcean's based in Finland, so it's Helsinki-based. So I'm the partner in London, and we have 4 people here, and I think sort of 8 people over in Finland across the whole company. It's perhaps most well known because it was created by some of the original founders and investors in MySQL, which sold for $1 billion around 2007, 2008 to Sun Microsystems. A couple of years later, Sun was acquired by Oracle. And Oracle still owns MySQL. And then the same folks went off and created MariaDB, and then sort of in parallel created a fund, OpenOcean. And so you can imagine, because of that, OpenOcean's always been fairly well known for open source, anything in the data layer, shall we say, so databases, data infrastructure, the whole, I always say everything above the metal and usually below the application. But I mean, if you look at our portfolio, we have quantum computing, and we definitely have application layer stuff. We're a typical early stage fund. So actually, when I joined in 2019, we were positioned very much as a Series A fund. Now, the market has changed demonstrably since then. And I think given we have this kind of technical founder operator background, we tend to just say early these days, and we've done pre-seed, first check, all the way to, doing Series A. So, and that's pretty much, well, we are very much a B2B software investor in that kind of traditional sense. But as I said, we've done hardware with quantum, we've done robotics, we've done AI roll-ups, And we've done B2B to C, right? So probably the only thing we haven't done is straight consumer. So yeah, I think in that sense, that's probably what we're best known for. And we're writing checks sort of 2 to 5 million euros generally on the first round.
Okay, and then now you've planted, like you were just saying, a flag in the AI roll-up space. What made you decide that was where the next European winners are going to get built?
Yeah, well, I don't think it's just Europe, right? I mean, I think, the thing with this is that it's so big. There was a good article written by Sequoia a couple of weeks ago, I think it was, and it was something along the lines of, the next billion or $1 trillion business, whatever it was, will be a software company masquerading as a services company. And I think that is kind of the crux of it if you read the article, which is, the service market is so much larger than the software market. I mean, I'm sat here in the UK and the British economy is overwhelmingly a services economy, right? And I mean, that's kind of the way it goes in a modern economy. So it's underpinned by essentially people sat at desks, overwhelmingly, typical white collar work there. And if you kind of unpick a lot of this stuff, it does whittle down to communication work. So it's, a lot of emails, it's a lot of calls, it's a lot of conversations, it's a lot of spreadsheets, things like that, essentially updating databases. I mean, if you think about all the tools you use in a business, that they are what an engineer would refer to as a CRUD app, so it's the typical like create, delete, update kind of operations. It's essentially a skin on a database. So I guess that what I'm driving at there is that all this stuff lends itself massively to AI. So what you're looking at is you're staring down the barrel of let's call it 10 times the size of the pure software market. And for the first time ever, we actually have the technology to automate the work that would have been, that is done by so many people in the services economy. So I think that's why it's going to be where the next big, and it's not going to be the only place, right? But I think it's just a very compelling time and place to do this. And I do often make the point that I think time is key here. I mean, it's going to take a long time, right? We're talking about state level, global level, global scale transformation of many economies. But that you need to crack on with it basically, because once it's done, it's pretty much going to be done. I sometimes give the analogy, I don't know if it's a perfect analogy, there's probably some like historians or economists out there who call me out on it, but I remember reading about what Margaret Thatcher did in Britain in the 80s, where we came out the 70s, the economy is a bit like it is right now, like it was kind of in the toilet. Sort of everyone was referring to us as the sick man of Europe, all that kind of thing. And Thatcher obviously did a huge privatization wave that kind of went through the British economy. Sure enough, yeah, some negatives to that, but overwhelmingly, like, it did make the country wealthier. And it unlocked what I would say is a lot of latent productivity gains and therefore wealth. But you can only do that once. You can't privatize something you've already privatized, right? It's a one-hit wonder and you get that latent unlock. I kind of feel like it's similar. Like, once AI has eventually transformed and let's say we've re-platformed services onto AI, it's done until the next thing, right? So I feel like there's a bit of a time window here to get it done. And I think that's probably why a lot of people are kind of rapidly looking at it.
I see. So you're referring to a time window where we're able to only consolidate and AI an industry once. And then after that, there'll just be new companies built on top, of course, competing with each other.
Like those, right?
This huge wave. Yeah.
I sometimes joke that the next, right now, this whole theme is centered around what people call white collar work, right? It's AI is disembodied essentially for the most part today. When you and I are using AI, we are definitely using it in a disembodied way. We're using Claude or whatever. And therefore it can do things within the environment of a computer. And so it's very good at knowledge work, shall we say. But I sometimes joke that, we're keeping an eye on, as I said, we've made a robotics investment. We're keeping an eye on like what's going to happen when robotics has its ChatGPT moment. I think that's incredibly exciting because, generally speaking, the jobs that people don't want to do, and this has always been kind of the kind of sick joke about technology, right? Is that, we've had all this great technology, but like I still have to take my bins out and like actually, I don't mind writing stuff and, doing some of this white collar type thing, but, I love taking my bins out, so I do think actually as and when, and, I think it really is a question of when we get generalized robotics, that will be fascinating, right? In terms of like what is possible in the services, because, that's really what it'll attack, right? Will we have bin men? hanging off the back of lorries, or will it be more like Star Wars, where those droids come off the back of the those like carrier things, and they get off, do the job, and go back? I mean, I think that would be a much nicer world. Probably comes with its own problems around people becoming lazy and all those kind of more philosophical questions. But yeah, look, I think it's probably the most interesting time since I've been in the industry, to be honest. So 7 years. So yeah, I think it's a bit of a long-winded answer, but I think that's probably why it's the most compelling thing. Of course, Anthropic, etc. These companies have to exist. Actually, maybe just as a final point on that, one thing that someone asked me, and I think I still kind of feel like this is a strong angle on it, is right now many VCs are terrified about investing into software, because they're just like every day reading an article about how Anthropic releases this thing, and it completely just there's like a slew of just like eviscerated startups that are kind of killed in the cot, basically. In this world, every time something new comes out of Anthropic, or choose you AI provider, it only makes the AI-enabled service roll-up theme more compelling. And so you don't worry so much about that world. You actually, every time something happens, it's a good news story, frankly. And I don't think that they're going to start doing this stuff. I mean, I don't know if you saw that article around, who was it? I think it was Thrive, or was it General Catalyst? I think it was Thrive, working with, and I think it was OpenAI. It's going to be one combination of these things, but where they're basically partnering. And I imagine that's because, the big AI labs have an incentive to re-platform the economy on their platform, but they're not going to do the heavy lift of that, right? They're going to outsource that, shall we say, or partner with a PE fund or a VC fund, or however you want to think of that entity, because let's be honest, there's lots of different structures there. So I think it's super exciting, really, really interesting stuff.
Yeah, I could spend hours speaking about what the next 50 years, 100 years will look like with AI, because there will be a point where everything can be automated. The way we collect resources and the way that we get energy and power and get food, everything will be able to be automated. And at that point, what do we do with our time? Will there be some sort of universal minimum income that we all get? Who gets the nice beach house if there's no work to do? How do we share those resources together?
Well, I mean, obviously there is a philosophical angle on this, right? Which is like, where does it lead you? I remember, was it Peter Thiel who said that like crypto is capitalist and AI is communist? So, crypto seems to be not doing so well. AI is booming. So that would sort of suggest the path we're on. But yeah, I mean, just tying it back to the roll-up thing, it's not, roll-up is just a method, right? Like it's just a method for getting the stuff out there. You could build an AI platform and try and sell it, right, as a SaaS product, but you're not going to get much value capture, and it's probably going to be painful or very inefficient and very expensive, because you're going to be trying to push this AI thing into a traditional SME, and they're going to be like, oh, I don't want to adopt this. I'm sort of on my way out, as it were. So I equally get quite interested in other things like franchising, which is, something else I spend a bit more time thinking about now, because there are certain parts of the economy that just don't lend themselves to rolling up. Other areas do, and that's obviously very compelling. But there are other areas that do not.
Can you give me some examples?
Yeah, well, there's a really funny one that I don't know who the investor is in it, actually. Well, actually, the other thing about franchising, it's very capital efficient. So sometimes you might not... rolling up is capital intensive, right? So you tend to see investor names all over that stuff. Franchising, on the other hand, I mean, you do see investors, but equally it's much more capital efficient if you can do it, because obviously you don't have to go and do all these transactions. But there's a very interesting one that's in America called duty calls. So obviously they play on duty calls, but it's basically people picking up dog waste. So if you have a neighborhood in America, Britain, kind of West, we have high levels of dog ownership. People in America presumably have these huge lawns. They're all every member of the household's probably at work or whatever. It's not a very enjoyable job. So literally these people come in these branded vans, and they'll pick up all the dog waste and get rid of it for you. And that's like a service, right? But, is that a roll-up? Like, no, right? Because there's not really any pre-existing, and if they were, they're probably like one-man band things, right? It's not something you would really roll up. But instead, it's like business in a box where you can provide all the technology, the marketing, the brand, obviously, and people will adopt that. And I think Slow Ventures wrote, I think it's where I initially saw that company, Slow Ventures, on their website, and I recommend people going and reading their stuff. But they have a franchising kind of deck that they have that I go back to now and then to read. Yeah, I think it's equally fascinating. I mean, it depends how you demarcate the subject, right? Because are you talking about services or are you talking about roll-up? Because if you're talking about services, then roll-up, like I said, it's just a method, and then franchising is an equal method to do that. So I think duty calls is a very interesting one. There's a lot of this in HVAC. There's like crime scene cleaning, anything like that. But the other things that Slow Ventures point out is like, one thing is technology, right? Like this is like a weird kind of alignment of stars. That on the one hand, we have the technology on the AI piece, let's say, to really automate a tremendous proportion of the business. And why is that important? Well, obviously, yeah, there's a question of profitability, but it also frees up the individual to do the stuff that they are very good at. So humans are kind of uniquely placed to, walk into someone's garden, hop over a fence, pick up the stuff, put it in a bin. We talked about robots. Forget about that for a second. So humans are uniquely placed, and also a large proportion of humans can do that, right? Not many humans are great accountants or bookkeepers. So if you can offload the kind of boilerplate work that people don't enjoy doing to a system, let's call it, and then you free them up to do the stuff that they're particularly good at, then you can offer this business in a box thing. And Slow make this point around how generationally younger people do not want to work for someone. So franchising becomes a very interesting proposition in that type of markets. Yeah, I appreciate, this is about roll-ups, but I also think that that's a very interesting development. And I'm keen to look at both of those things, because for me, it's more about services than roll-up.
Yeah, what I find curious here, like something I'd want to think about on the franchise side, is if we are getting to a place where it's so easy to automate a lot of this work of business in a box where you could do it yourself, there, with AI, why would an individual that wants to be their own boss, do the franchise route if they could use AI to build out all of the assets, all of the collateral, all of their marketing strategies?
Yep.
It's but then obviously it comes down to relationships that the franchise can build. So I think it really depends on each industry.
Yeah, I think it's brand is important there, I think, and trust and things like that. But you're right. And I mean, the other thing that we always have to check ourselves on, and it's that like Simpsons meme, right? And it's, I don't know if you know that Simpsons meme where, I think Bart says, "This is the worst day of my life." And then, Homer goes, "It's the worst day of your life so far." and I think a little bit like that with the AI stuff, where I might be talking about, it, and, somebody says, "Well, yeah, it is good, but it's not building the enterprise stuff today." And it's like, yeah, that's the key point. Like, not today. Like, God knows what it'll do in just 3 or 6 months, let alone 3 or 5 years. And then who knows, a lot of people don't believe there'll be software in the traditional sense, right? People believe in this kind of, I think they call it ephemeral software, where there'll just be this kind of like, crystal ball, you'll just conjure up whatever software you need for whatever you're doing, and then it will be gone again, right? I don't know if that's where we'll end up. I tend to think there is a value in having some stuff built, because actually a lot of stuff doesn't vary. I mean, I mentioned bookkeeping, right? It's amazing when you look between companies in different spaces that actually the stuff that's a challenge for them is all the same. I mean, largely the same, right? I mean, it's, how do I stay relevant with my customers? How do I continue to know stuff about my customers? That's not industry specific. How do I chase late payment? I mean, that's not industry specific. So there is a lot of stuff that, if you could build it out in a really good way, I imagine you could offer a platform. But you're right. I mean, there is a question mark, and this is what I was getting at, what so many VCs are worried about software. It just feels like stuff is being destroyed, if you will, every day by these models and what they can do. But yeah, I mean, time will tell, right? I mean, we'll have to find out.
On the last episode, we were talking about how Claude could, we're going down the same path of VCs are worried about where to invest because Claude can destroy any business. And we just talked about how I'm sure Claude is going to release something that is going to kill Lovable, and right. The next day they release Claude Design.
Yeah, I saw that.
which hasn't killed Lovable. It's not good enough yet, but it's one step in that path.
It's like the Wix thing, isn't it? Everyone's been like talking about buying shares in Wix because Wix owns Base 44, which is a Lovable competitor. And they acquired it in 25, I think. And it just announced it crossed 100 million ARR. And, it gets you thinking, doesn't it? Because the one thing Wix, let's say Wix is going to be disrupted, and I think that's fair to assume. But one thing it does have is it has a tremendous reach. Like all the people who use Wix to build websites in a WYSIWYG way, they're probably exactly the same demographic that want to build apps in a low code or WYSIWYG way. And yeah, does that mean that, how quickly can they just snap up the market and then cut Lovable off on the growth trajectory it's on? I think that's a very, very fair thing, let alone Claude, right? That's just another vector of concern.
Yeah. And the release also, I think, made Figma shares go down by 9 or 10%.
Yeah.
Overnight. It's a scary time, I think, for tech VCs. I have a question for you, though. So what would you say separates a genuine AI roll-up from a service business with a chatbot on top of it?
Yeah. Well, I think it's more structural. So I think the one thing that I'm always concerned about when I meet a company that's pitching for investment and the claim is we're going to do an AI-enabled roll-up in whatever domain it may be, is, and I suppose this is very much coming from like a kind of tech background that we kind of have at OpenOcean, which is like, explain that to me. Like, we're very comfortable with our knowledge around what's possible today and likely what will be possible in the coming years, at least to some extent. And I think it's quite clear if the people don't understand the subject. So, and that worries me because I want to see a very clear understanding of like, and this sounds a bit brutal, but where's the headcount going to drop? Because fundamentally, the only reason this is interesting is because it's not slight transformation of EBITDA. It's like radical transformation of EBITDA. And radical transformation of EBITDA can only be achieved if a tremendous amount of the work can be automated through, as I mentioned earlier, let's call it white-collar AI that can operate on a computer and do kind of like white-collar work. So if somebody sort of saunters in and the story feels a bit more traditional, shall we say, and their understanding of AI is fairly cursory or kind of, Main Street, for lack of a better term, I think that's a bit of a giveaway. Not every industry is suitable for this, right? So, we're involved in a building management AI roll-up. And for me, that's like just night and day obvious that it's a huge proportion of its overheads can be automated and therefore obviously like reduced. But if you were to walk in and tell me you're going to do an AI-enabled roll-up of scaffolding in businesses, part of my brain would get excited by that because scaffolding is everywhere. Every town, city, village has at least a couple scaffolding businesses, probably because they were notorious for like being great ways to funnel cash out of the. But that aside, it's clearly like a ubiquitous industry, right? In the sense that like everywhere, everywhere you go, you see scaffolding, right? So it's like and it's hugely fragmented. But the challenge is like how much of the overhead can you actually rid yourself of? And overwhelmingly, the overhead is people climbing and going up these scaffolds and putting them together and taking them down, right? And a lot of their business model is just charging for these scaffolding things, etc. So it doesn't strike me as like what's the attack surface there for AI? And like I said, without robots and stuff, like with what we're looking at today, that's not as compelling, despite the fact that in isolation, it ticks a lot of boxes. High fragmentation, probably can be acquired on, relatively low multiples, struggle to get the people in, right? As I said, as much of this is around technology as it is macro factors. Like demographics is just clearly a huge part of this. There is no succession. There's no skill. You can't get bookkeepers, right? No one's training up to be a bookkeeper anymore. And so it ticks a lot of those boxes. But if someone pitched that, I'd be like, I don't think you fully appreciate like why this would be interesting from a venture perspective. I say all that, right? But people are aware of companies like Roofer, and I think, is it called Cabana? And it's not to say you can't do something there, but I think personally I'm just more interested in the kind of where not just the back office can be automated, but also the front office can be automated. Front office in scaffolding today cannot be automated. Front office in building management can be automated. It's like the whole pie can be kind of addressed.
Yeah. So your argument isn't that it would be a bad industry for a roll-up. you would just say that that is not an AI native rollup. An AI native rollup would be something that would transform the business from inside out in a lot of touch points, not just integrating the back office.
Yeah, exactly. I mean, I think if it's just the back office, then you're in the world of PE. If it's the whole pie, front and back, then I think it's much more of a venture case. And of course, that's the debate, right? Like, is this a venture case? And I think, if you can't really address the front office, I think it's hard to make that case, much harder to make it. Whereas essentially, if you can do the front office, then the roll-up thing really becomes clear that it's just a method of it's just a go-to-market strategy, right? Rather than trying to push this thing onto the client, I can actually just acquire them. And in some sense, you're kind of disintermediating the acquired business, right? And because you don't want the business, you want its clients. And the argument is that I can't get to the client organically because of the structurally how the market might be set up. Many of the most compelling domains for this, I think, are markets where the customer isn't on the market as a buyer. Like maybe they turn up every 3 or 5 years, like that's just not really what you want from a venture kind of scale. You really want to be able to go and get them today. And so, I think that's where it really gets interesting. But as I said, I mean, Rufa, Kibana, and I'm sure there's others are doing well as far as I'm aware. But I think from my perspective, and this is probably being kind of more of a technologist than a finance guy, like I get excited when I think this whole business could be autonomous essentially, and that's just not true for everything.
And so when a founder walks in pitching a roll-up, what are the green flags and what are the red flags you often see?
Yeah. Well, I think green. Let's start with the green flags. As I said, it's someone who I really want to be like I want to feel like I'm speaking to a technology firm more than a financial engineering firm. So, both things are important, but like if the person opposite you feel is like really just reiterating a spreadsheet, let's say, like, oh, well, we'll do this, that, and the other, and here's value creation. I'd much prefer to sit opposite someone who's like, well, if you've seen what's happened with the models, we can now do this thing, and we couldn't do it before. And we know that there's 100 or, 150 workflows that we've mapped out. And I know that I can do 100% of the, or 50 of them, and like, I don't know, half of the next or something. And you get a sense that actually what you're really talking to is a technology business, which might sound like an obvious thing to kind of look out for, but there are many, many people doing this now. I was just joking earlier, like, we must get pitched an accounting roll-up every week or something. Because A, it's an obvious one, but B, it's also where a lot of finance people feel they know what they're talking about, and they do. But, a lot of those founders that I've met, I wouldn't say like they're technologists, right? They might obviously like have someone involved or whatever, but equally, so let's say you do have someone there who's like very much gets the product, very much a product person, very much a tech person. You obviously do need someone who understands M&A. And that's perhaps where it's a little bit different to, kind of historic VC judgments where it is a bit more kind of, does the person understand do you have a go-to-market strong person? Do you have a good tech and product person? You kind of do need someone who has done M&A, I think, because not that it's rocket science, and I'm sure lots of M&A kind of practitioners will call me out on that, but from what I've seen, I don't consider it to be rocket science. But it clearly there is knowledge there that if you don't have it, you will struggle, particularly at the pace that you need to do it, right? Because again, we're talking venture scale stuff here, so the growth does have to be quite quick. And that means doing, many, many acquisitions in a year, which is
when you say many, like what do you mean by many?
Well, I mean, it's hard to say, right? Because you could do fewer larger ones or many small ones. But let's say, like low double digit, when you're really kind of in your stride, probably like 10 or 20 even. I mean, I am aware of companies that have done that. A lot of people don't believe that. Like, how can you how can you buy and integrate? Integrate's kind of the next question, but how can you buy and integrate, even 10, let alone 20 in a year? And I think that, to be honest, that is actually a bit of a question mark over the whole thing. There is actually evidence in the market now of people doing that, but is it sustainable? And then the next question always follows when you do speak to people, particularly PE people who've done a lot of this over the years, is like, how does the integration work? yeah, sure, you bought them, but this is obviously predicated on huge AI transformation. That doesn't happen overnight and on its own. And so that's the next question, right? Do you have like an operator who can really go in there and make the magic happen post-acquisition? So I think you've got the product tech, you've got the transaction, shall we say, and then you've got the integration piece. And I think having that covered in the core team I think you need to see it. It's funny, actually. I mean, as you mentioned earlier, I'm an ex-Uber operations guy, and I always kind of joke about that because I was kind of a strange operations manager at Uber because I don't think I ever met another operations manager at Uber that wasn't a former software engineer. They were overwhelmingly ex-M&A, TMT folks or ex-McKinsey type Accenture consultants. That was generally what they had done before they came in. And of course, that was a great skill set for operations at Uber. And everyone did pretty well off that generally and enjoyed it and was part of this kind of phenomenal story. But that was during the zero interest rate period. And that was when, everyone says money was cheap and it was incredibly expensive business, right? And it was just all subsidized, burning cash hand over fist. And it was a business where operations was a critical part of it. Like, if you didn't have the operational guys, it didn't work. You had to have that, which is very different to a SaaS business, right? Like, I know people who have ARI in the millions. It's just them, right? It's a SaaS business. It's just them running it. It's a solo entrepreneur situation. And it's because operations just isn't that interesting mostly, for the most part, in SaaS. Not so true in Uber. And then when Uber kind of had its outcome, a lot of my colleagues went off into what I would say is like analogous businesses. So they went to the scooter companies, they went to the bike companies, Tier, all that kind of thing. They went to WeWork, they went to Oyo, the Indian hotel business. But the critical part here being that these are all operationally intensive companies, and pretty much all of them did not work out. Some of them did, but basically they never replicated the Uber kind of thing, right? And then I think we've had the interest rate go up, money's been a bit more scarce, people got really concerned about efficiency and burn rate, and then SaaS kind of was back in the fore, right? Particularly after COVID, you think about that 2021 period, etc. But now with AI and the roll-up stuff and service kind of transformation, those operate, and because AI obviously enables non-technical people to do some pretty interesting stuff, I actually think that class of people have like another opportunity to do something really tremendous and make a lot of money in the process. So I often wonder whether that kind of Uber alumni is, obviously Dwelly's got that background. So those people from that period in time, which was quite unique, I think have another chance of doing something pretty great, where I think they've been left out in the cold since sort of the Uber zero interest rate period.
Okay. Yeah, I find that really interesting though. So you're saying a good constellation, a good founding team is an expert, it's a tech product guy that can actually integrate the AI pieces, and then an operator you mentioned that would actually see the integrations happening. Does this operator need to have domain expertise? How important is domain expertise in an AI roll-up play?
Yeah, I think that's probably, I would say it's critical, particularly from the investor perspective, right? Because I am not a domain expert in all the stuff that I see, but by being an investor, I have to be able to look at lots of stuff. So I always want to make sure that the team itself has the expertise in the domain, because they're not, I'm not going to have it. And you need to trust that they know what they're doing. So I think people who have had a background, again, going back to Dwelly, they had done a similar thing in Eastern Europe, right? So, it wasn't their first rodeo in that sense. In our founder base, in the roll-up space, equally, they've all done something prior. So there's no doubt that they understand it, and you can quickly verify that as well. So I think that's really important. Actually, weirdly, and this might sound a bit blasphemous as a venture capitalist, I actually think the technology piece is the kind of least concerning part. Don't get me wrong, there's engineering that needs to take place, but largely speaking, the kind of things you need to build to get the gains, it isn't rocket science. You're basically, you are going to be using the big AI labs models. You'll be hitting their API. Yeah, you need a database, and at scale, it will become more complicated. But certainly in the early days, a lot of this stuff has never been so easy to do. That's kind of why Why is it so? AI was around, GPT-2 and stuff. It was around before all the boom, right, in sort of 22. And the reason that stuff, why it felt niche, let's say, back then was because it just wasn't accessible. What ChatGPT did, and I think it was ChatGPT's release that really catalyzed all this, but what it did is it just put it in the hands of everybody, right? And I think that's essentially what we're seeing. Like OpenClaw is a good example. Like pretty much anybody can deploy OpenClaw, not least because AI can help you do it, which is kind of circular. But so actually, yeah, I think domain expertise is super important. And if you put a gun to my head and said who's not in the team, I would actually probably say the tech, because I think the tech is more accessible. The domain expertise can actually be very scarce. And then like on the M&A piece, again, like I think you just need a trusted pair of hands on that who knows how it works, because you need a well-oiled machine on that piece. Yeah, shade might get thrown at me for that, but I think that's probably if I had to rank it.
Yeah, that's really interesting. And so do you have any more red flags or green flags before I move on to the next question?
No, I mean, on the red flag thing, I mean, one thing, it's not really a clear red flag, but I think one thing that's clearly true is that there's a lot of tourism in this. There are a lot of people who I think are kind of opportunistically, nothing wrong with that, but opportunistically going into it. As I said, I think there's a lot of VCs actually that say, oh, hang on a minute, actually my skill set is applicable here. And I know some absolutely phenomenal VCs who have gone in it, and I know they'll be successful. Equally, I'm seeing people floating around in it, and I'm a little bit questioning it. But yeah, I think probably that's the only stuff that I would be like majorly concerned about. And obviously there's a load more stuff, because there's even stuff like it's not so much the founders, but like some markets are cyclical, right? Like service industries kind of by definition tend to be like, you have clients who come in seasons or whatever. And like some stuff in like building management, for instance, it's not like that. It's it's kind of the definition of rent seeking, right? I mean, it's like you get a set thing every year. And it's much more like ARR, which is obviously from a VC perspective, much more feels like home, should we say. But, so I think there's things underpinning the founder, which is kind of not to do with them, but to do with the kind of space that they're looking at.
You mentioned before about velocity of acquisition or rate of acquisition needs to be high for it to be a VC case. With that said, I guess a capital stack is really important, and probably they have to leverage debt to be able to keep up with that acquisition pace. Typically, VCs don't really like having debt within the stack, I think, historically, but of course, they have to change a little bit when it comes to a roll-up play. What are common capital stacks that you've been seeing or that have been pitched to you?
Yeah, so I think that the true answer is that I don't think that's really well known at this point. So you have on the one hand general catalysts who are pretty forthright about the fact that they don't actually want the company to take debt for quite some time, because they believe that by having debt, the company is put into a position where it's going to have to be more risk averse, which kind of flies in the face of the swashbuckling nature of venturing and trying to do high growth risky things. So I think that's not so much what does the startup pitch is like, what are the big movers and shakers in the market offering, should we say? And yeah, I think GC is pretty clear that they want equity behind the story for the most part, at least, in the very earliest days. And I do understand that. I do fully understand that. However, not everybody's GC, right? GC is a very, very large entity. So I think for us mere mortals, I think the truth is that you can use debt. And there's good reasons to say that as well, right? I mean, you're buying profitable companies. The companies you're actually acquiring aren't loss-making, or certainly we've not done that. So in some sense, the acquired companies should be able to throw off cash. And then, we're seeing like significant EBITDA improvement even within like the first few months. And therefore they throw off even more cash, right? You can obviously make the point that, well, at the holdco level, you're obviously bulking it out, but I think part of the delicate balance here is making sure the holdco doesn't get bloated, which is always a bit of a temptation in a tech VC case, right? Oh, let's build the team out and go bigger. Kind of sounds daft, given that the whole fact is that the AI thing it's a not require that, and I think that's increasingly the case. So I think on the debt side, we do see it. It tends to be 1x leverage. So like, let's say doing 20 million in turnover, then maybe you can get 20 million in debt. The terms of the debt are quite important. The amortization is going to kick in at some point, and that can become a big spike in overheads that can be slightly concerning. But on the flip side, I think using the equity, and this is kind of maybe more from the VC's perspective, the investor's perspective, using the equity to make the acquisitions sounds like a good deal for the founder, right? Like it's, if I own 20% of a roll-up and they use all my money to acquire the revenue, that's like really expensive from my perspective. You could make the argument, and I've heard the argument, and I think some people actually look at it this way, which is, well, I've got the capital. Why don't I go buy the businesses and install the management, and they can have 20% and I'll have 80%, and this is kind of why I'm saying I don't know if we have the answer, because the truth is that there's a lot more going on here. Like I work in a VC fund, and the few that we've done, right, they live inside of let's call it a typical vintage-based VC fund, which has a start date and let's say an end date of 10 plus 10 years, forgetting about any potential extension. I think there's a question mark about what, is that the right way of doing it, or should it be a holdco? And I think a lot of people are looking at holdco structures. I suspect the holdco structure will win out, and then you can do a lot more interesting stuff from the capital stack perspective, because you can raise money at the lower down the org, right, for vertical specific roll-up entities. You can do it at the holdco or whatever. You can raise equity even at different branches of that structure. And obviously you can insert debt, sort of debt companies in between as well, just to limit your liability, right? So you don't take down the holdco if things go south. So yeah, I think it's I don't know if you really know the answer to it at the moment. Other than, I think debt is quite an obvious tool. It's a bit like fire, right? It's like a great tool and a harsh mistress, or whatever that saying is. Like, if you use fire properly, it's like amazing. But if you use it wrong, it will burn your house down and destroy everything. So it's been a bit of a learning thing for me, right? Because I'm very clear with people, like, I am not a finance guy. Like, I do not come from a finance background. I'm a software engineer, a kind of former startup operations guy. So, I've had to learn a lot around how debt works and how best to leverage debt. And who do you get the debt from, right? Because obviously in the early days, it's really who's going to lend to you. It's the kind of venture debt providers. A lot of people that I've spoken to have kind of said, well, you're better off trying to get past that point and then going to direct lenders and, getting out of the venture debt kind of world, where there's warrant coverage and stuff. So yeah, I don't really have a clear answer for you, but like that's just some of my observations, I would say.
There's a lot of financial engineering that can happen here. There's a Swedish roll-up that I was speaking to recently. They acquire real estate agencies, and they've been doing 70% rollover equity, and then the other 30% is just paid out in equity.
Yeah.
Have you seen many cases like that where the holdco is giving rollover equity to the companies that they acquire?
Yeah. I think it's actually quite common. Certainly so. What seems to be the case, and I think it's smart, and we obviously try and emulate this as well, which is like the first acquisition is not just any acquisition. It has to be an acquisition where you really think you're buying a solid foundation. So let's say you want to take over Europe with your whatever roll-up. You probably want to buy a solid foundational company in, say, the UK, France, and Germany, just like to choose three. But you probably also want to be acquiring the general manager for that territory, the person, right? So you kind of it's as much kind of a beachhead acquisition in terms of market entrance as it is an acqui-hire. So typically, and I don't want to sound ageist here, but typically, people are looking for like, who's the younger person in the market, who's a bit more savvy on the tech, who kind of has read the tea leaves, understands what's going on in the world, and is like, I would much rather be part of an AI-enabled larger entity that's kind of forward-thinking and will be here, hopefully, in the coming years, versus sat here on a smaller legacy boat, right? And so I think that's quite a big part of that. And then so what do? Well, you do roll over some of that equity into the holdco, because you want that person to be incentivized on the long-term kind of prosperity of the overall enterprise. Doesn't mean obviously everybody gets that right or whatever, but it seems to be that they're giving it. It's also quite an interesting way of getting more with less. So, you can sort of pay with a bit of equity, shall we say. And then, you can defer like quite a large proportion of it. And of course, that's then going to be pegged to revenue, which of course, naturally you'd hope doesn't drop. But if it did, then you would end up paying less. And so I think that's quite clever, because when you think about the rollover, you think about the deferring, you might only require like a fraction of what you need up front. And then again, actually, the company itself could become very cash generative in a short period of time and ease the cash requirement on making those payments. It is fascinating in that regard. And obviously, that's stuff you don't come across in typical VC SaaS businesses. It's just not relevant really in the early days. But in this case, you can. And I think it's great because you do see entrepreneurs who are being very creative with it, because they also don't want to have to overly dilute themselves, right? So they're thinking about, how do I do this without selling a large proportion? As I said, from the investor's perspective, if all their money is going to be used to acquire profitable companies, there's a question mark about why don't they just do that themselves and install the management. So I think quite savvy founders kind of think about that stuff a lot more about, how can I get to a certain size sooner without necessarily maximizing my cash outlay, should we say?
Yeah. When I've spoken to VC before, they told me, and this wasn't related to roll-ups, but they said that they don't like a messy cap table. So is that a concern here if they do roll over equity to all of the companies that they're acquiring, and then in the future they need to maybe raise a second round? Is that something that the VC might dislike if there's too many people on the cap table?
Well, it's certainly true that VCs do not. I think most investors do not want to see a messy cap table. I don't know really. It depends what the problem is. So, sometimes the problem with messy cap tables can be just like governance things. But, I tend to err on the side of pragmatism there, which is, you can sort that out. You can make it such that decisions can be made without this long tail of stakeholders. In an ideal world, you would have a nice clean cap table. Even from the founder's perspective, you would have that, right? Because they also want to maintain high levels of ownership. But I do think, at least in the early days, again, like, would it be unusual for, a senior early engineer to have 1% or 2% or something in the business? Well, no, not really. That's that can be quite normal. So would it be weird for me to look and see, well, you've given 2%, let's say, to what you're now calling the general manager of UK and Ireland, let's say, who was one of the acquisition targets? Like, no, I wouldn't worry so much about that. I'd probably want to meet the person, right? Like you would in any kind of due diligence situation, just to understand what's the quality that they're bringing in, as a judgment actually on the founder, should we say. But that wouldn't overly concern me, unless it was completely screwed, right? And it was like, the founders own very little early on and all the usual problems. But overall, I wouldn't say I get overly concerned by that. I think you can be quite pragmatic about it. So I haven't seen it so much so far, but as I said, we're doing this quite early on right? So we haven't really seen the evolution of that problem. It could be that actually, down the line, it does become something that gets brought up.
Okay. So you mentioned accounting and bookkeeping being a pretty crowded vertical. And of course, that might not be a good thing on the long term. If there's a lot of buyers, it becomes a seller's market. On the flip side, are you seeing any verticals that you think there are very good opportunities in that maybe haven't been looked at yet?
Well, I have to be very careful here, right? Because I don't want to turn a buyer's market into a seller's market. Look, there are a lot of things. I do think the accounting thing, to be clear, I think the accounting is really compelling. It's just I don't think it's universally compelling. So sort of, if you were to do that in Western Northern Europe, you're going to be up against lower mid-market PE as well as, any other roll-ups that have entered. There's a few actually that have entered the market on the AI-enabled side. I personally would find that quite a worrying kind of dynamic. But equally, if you said you were doing roll-ups, I don't know, in Southeast Asia or something, I don't know, but then, maybe accounting roll-ups are more compelling there. Again, if you go back to the Uber story, right? That's kind of what happened, right? Uber turned up in North America, Europe, and then copycats turned up in Middle East, North Africa, Asia, Latin America, right? That's kind of normal that there's this kind of rippling effect. So it depends on I think the geography is a big kind of parameter here. But I would probably speak in for the stuff that I like or I think I will like, and we're always at turning over stones, right, and finding stuff. I would speak in more abstract terms. As I said earlier, I think I would like to see, and I don't speak for everyone here, right? I would like to see somewhere where AI today can effectively automate the back office. That's almost a given at this point. and the front office, which is not a given. And that is not true for everything. So I think, in abstract terms, that's one angle. I think, another abstract term is, do I think what's the revenue kind of like structure, or the quality of the revenue? If let's say you were doing roll-ups and we're in this space, right? Like holiday lets. Let's say you're back to holiday, Middle East, Gulf holiday lets roll-up. Well, I'd be a bit concerned right now because nobody's going on holiday in Dubai and the Gulf area right now. And that could completely derail you, right? Because it's kind of, you don't have to go on holiday there, right? I would much rather, I would have a strong preference to something that I felt had a durable revenue, or resilient perhaps is a better word, where come rain or shine, the underlying client is paying. And, and you do see that in certain areas, right? Where there's regulatory reasons that you have to pay. Accounting is not a bad example, right? Come rain or shine, you must have an accountant do your books, right? So, I think I like to see that as well. I had an interesting conversation around the dynamic on TAM as well, which is, I think, an interesting one, which is AI is probably also going to increase the TAM of a lot of these areas, because AI is going to enable a lot of people who maybe weren't in the market to be in the market. So, for instance, just take like bookkeeping, accounting, or whatever. It's possible, or even legal. I was speaking to someone in the legal space about this. Let's take the legal one as an interesting example. A lot of what lawyers do, they can't get out of bed for let's say a couple grand. So you might have the most boring kind of simple thing that you want doing, but the lawyer just cannot price it below a certain kind of lower threshold. So they'll just turn the work away, right? Essentially, that client is not able to kind of be part of the TAM because it's just not interesting. Whereas AI you could actually have a kind of gateway service. Could even call it a product. Let's call it a service. You could have a gateway service, which is kind of essentially just 100% AI, with some Rails, with some whatever, maybe some specific kind of, sophisticated prompting, or maybe even some fine-tuned models or something, where suddenly that client can actually transact with your legal firm because you can price it kind of at an acceptable level, because you don't have to give one of your legal people, one of your lawyers, to do that work. And so that essentially expands the bottom of the pyramid in terms of the TAM. And then eventually, obviously, your hope would be that some point in that journey, that client is going to have some more meaningful work, which is more relevant to higher up that kind of chain of services and sort of more pricey stuff. So I think that's a really interesting angle. Like, is there a market that a roll-up can operate in where they can actually expand the TAM and have this kind of like gateway into them as an entity, as a brand, as a reputable brand? And I think law could happen. There are some people doing similar things in law. But yeah, so in just abstract terms, I think, and then there's all the usual stuff like, is it highly fragmented? Can you buy in at a reasonable price? Do I believe there's going to be multiple inflation in the near future? Because, like accounting in the West, I think, a lot of people are looking at it. I think for that reason, it's not as compelling. And yeah, the other question is like, will there actually, because, when you look at a company or look at a case, you sort of say, right, this is the revenue, this is the margin, and we're going to make the margin much larger. But that all assumes a fixed sort of revenue, right? Because we assume that the pricing will hold. But actually, in an AI, in a transformed economy, are we not going to be paying significantly less for these services? I think that's also an open question. And I think there's certain industries where I think pricing is much more fixed, at least in the short midterm. And I think there's areas where the pricing absolutely could collapse. I think law is potentially one of those areas, actually. Law could become much more accessible. And that's coming from a man who's not a lawyer, as I said, complete layman, but you can imagine it, at least. And I think that's kind of a combination of like red and green flag, right, in the same kind of breath. So yeah, I think in terms of specifics, probably shouldn't share that, but I think in terms of abstract terms, I think, that those for me are kind of like key things that I would look for and how I would identify. And here's the other good thing, is that even niche service markets can be ginormous, because don't forget, we're talking about a market that's like 10x the size of the software market. That's why geography is like an interesting angle as well, because, you can go to what feels like a niche geography and it's like, well, actually, this is ginormous in its own right. So, there really can be like 1,000 flowers blooming in all this, because, yeah, it's just so much larger than the software market, and I think that's what makes it super exciting. I mean, this is the real stuff. This is the real economy stuff.
That was a really interesting take, though, about increasing the TAM. And it makes sense in the example that you gave as well. If there is set processes that are maybe a little bit boring and not worth a lawyer really engaging in, but it's just filling certain forms, submitting that to the courts or whatever it might be. Like there's a lot, I think there's a big case also for citizenships and like being residents in different countries. It's usually a quite straightforward process. If AI could just take all of the questions or all of the answers, from the client, it then gets the right forms ready, prepares everything, advises on the right approach, and then all you're getting the lawyer to do is give their final seal of approval, and then you've been able to do that entire process for a few dollars, a few pounds, euros, whatever currency, and then maybe you've billed only $500, $1,000, euros, pounds. And now you have a new client as well that might come to you for bigger projects. And then it's easy to compete if you're a big law firm as well that hadn't previously offered those services, but now you are offering those services, and it's between going to you or maybe some paralegal or local, you have a higher chance of closing that client as well. So then it really does help in increasing the TAM.
I think it's also similar to what you've kind of seen in banking, like business banking, where there's now they all have this venture wing, right? And most of these venture companies, so I always laugh when I meet people who sell stuff to startups, and I'm like, well, they have no money, the really early stage, right? I mean, they tend to not have money to spend on all this stuff. But it's, why do banks love giving, why does Halifax desperately want your kids to be like, have their first bank account with Halifax? It's because historically you never move bank. I think it's changing a lot now, but, So getting capture at the earliest stages is really valuable. And I think, law firm is a very good example. I mean, I've seen stuff in divorce even, right? I mean, like areas within areas. So like with, divorce or patent filing, patent defense, there's very specific areas even within a kind of larger domain of law. And again, because these areas are just so big, they can actually be compelling in their own right, despite feeling like a niche. Though, of course, there is always the counterpoint of, well, won't the big law play essentially want to get into that eventually? That's just stuff that you have to consider. But yeah, I think we'll see a lot. And I mean, the other thing there is, which is just a human thing, which is there is a lot of entrenched special interests in these areas. Yeah, we can sit here all day long and say AI can do this and AI can do that, and won't it be fabulous when AI does all this? But you're actually going to potentially be putting some very powerful, wealthy people out on the street, and they're not just going to sit there and take it. So it won't be long before people, I don't know, a bit like unionism, right? There'll be labor problems with all this. I know Germany in particular is a challenging area for all of this because they have a very strong kind of union. I can't remember what they call them now, but like all companies have to have this like union or something. Probably why America can be more compelling, right? They have they're not as strong on that side of things. But yeah, look, there's a lot of entrenched special interests, and they're not just going to take this laying down, right? They will make the argument that you cannot defer to an AI on legal procedure, all that. You'll see it all. So there will be like, call it regulatory headwinds with some of this stuff.
That can't be forever, can it? I mean, they can try and slow it down, but.
Well, yeah, I mean, the story of the Luddites would suggest that they can't stop it. But, people always joke about in Germany, you still have to go to the notary, right? And all that kind of thing. So probably there will be areas, there will be areas of the world where this is more prominent and areas where it's less. But, generally the direction of travel will be in one direction, right? It always is. It's usually up and to the right, thankfully. But, I think it will be very interesting to see how countries respond to this, because on the one hand, they need it. There's a huge demographic crisis. But on the other hand, they don't want it because it will lead to short-term or even medium-term, societal challenges. You mentioned earlier around, was it universal basic income? Well, I was chatting to a friend who's in politics, shall we say, and he's pretty switched on that topic. And he was saying, well, we've kind of got it anyway. I mean, if you look at like the British spending on social care and things, I mean, is it something like 20% of the working population of Britain doesn't work? So, it's kind of, he described it as UBI through the back door. It sounds a bit painful, but he already has that view that we've kind of already got there. It's not an explicit UBI policy, but that's clearly what's happening. The state is sponsoring more and more people, which I think is a bit sad. I think you get a lot of purpose out of doing things, but it would feel like actually that's already kind of happening.
Yeah. No, I had a dinner yesterday and we just went down on like a tangent talking about this for so long. And it is like, if we're talking now in a 50-year timeline where we can gather all of the necessary resources and be able to not give people just their basic minimum to live, but actually give everyone a nice apartment, a nice, like they can eat what they need and so on. I guess that sounds great in one side, but again, the purpose, like what do you actually do? And we're not just going to sit and live our basic lives. We need to have a purpose, a mission, and something to almost compete with other people. Does that mean we're going to get more into arts and entertainment and sport? Like there's a lot of questions, but I think we end up spending hours if we go down this tangent.
Elon Musk's sustainable abundance, right? I actually joke about this in the sense that everyone keeps talking about the birth rate, which is a huge problem, obviously, and how that will lead to, an aged population and all that kind of thing. And then AI comes and kind of saves the day and gives us that productivity gain without necessarily the population boom. But then maybe everyone just starts having babies again because and the population booms because we don't have to go to work so much or whatever, or you can go back to a one income household, which I always suspect has got a big part to play in that. So yeah, I mean, who knows? Other than I think it's going to be incredibly interesting for the next rest of our lives probably. But yeah, I mean, I tend to say years, but I think it's months. We're counting this stuff in months at this point in time.
Oh, really? Yeah. Well, that just means one thing. Now is a time to grind before AI takes all of our jobs.
Yeah.
But Sam, I have one last question. And this is something I ask everybody who's doing interesting work in the roll-up space. Is there anyone that you think would be great on this podcast that we could speak to?
So my former colleague, who you can blame for me being involved in this, Cyrus Hasabi, have you had him on?
No.
Yeah, I mean, you got to have Cyrus on. I mean, the guy's just phenomenal. So Cyrus, who's now at Shaw, sorely missed at OpenOcean. I think he for me is I think he's pretty much held up as like a kind of real early mover and very knowledgeable on it. I mentioned, GC Thrive. I mean, the folks over there, the guys at Tenet that just started up. I don't know if you know them. Alex Prokofiev, Rollup Europe founder. There's obviously Dan and Ilya over at Dwelly. I mean, take your pick. I mean, there's a lot of people doing interesting stuff. There's Callum Brannan, who's the founder, and Konstantin Schroeder, who's the CEO over at Arbio, which is one of ours, so Levels and Arbio respectively. But yeah, like there's a ton, man. There's a lot of interesting people doing this. Both on, I mentioned operators and VCs there. So yeah, I'm more than happy to connect you. I think, I'd always defer, like, if you could only speak to one, and this is nothing against the other guys, but I think Cyrus is, the guy's just like a force of nature. Like, and I know I do actually credit him massively with me even getting into this, because it was his kind of like energy on the topic that kind of got OpenOcean into it. So yeah.
That's brilliant. And if someone is currently looking for funding their AI roll-up, how should they reach you?
Sam at OpenOcean.vc. Yeah, I think that's probably the best way. Just drop me a line and I will look at it. I tend to get a lot of emails, as you can imagine, but maybe just have like, I got this from Dylan's podcast, and then I'll know from. I can attribute it, and I know I absolutely must respond to that one.
There you go. You've heard it here. If you come from the RolyPoly, you're getting a chance of a meeting.
Yeah. Put it in the subject.
Perfect. Brilliant. Sam, This has been an incredible episode. I think we went on a few different tangents, but all very interesting ones. So thank you so much for being on the episode.
Yeah, no, thanks. And I hope you can edit into something more maybe comprehensive that makes sense. But yeah, no, really enjoyed it, and always nice to speak to someone who's interested in the topic.